Seems like the NSE is clawing back very modest gains, but at least ending yesterday's session, today's session in the green.
Yeah, thanks a lot. That was a good performance. I think it shows some resilience, a bit of resilience on the market, although it was a bit fractional. But we saw some shares being propped up by their liquidity positions, and I think there's a bit of resilience in the market if you look at that week-on-week comparative basis. But of course, the flow of funds also coming in, and also a bit of that coming in from the foreign investor support. Today, I think they were at 50% of the total market, and Safaricom obviously was a net beneficiary of this. So I think if you extrapolate this and you work backwards, you realize that I think we're going to see some funds inflow from Europe. Obviously, with what's going on in Europe and on the brink of defaults, yeah.
All right, so as investors get a little bit more bullish about the market, we're seeing some of the top gainers today being Bamburi gaining 6.6%, TPS at 5.4%, Sasini 4.7%, Samir Africa 3.7%, and of course Safaricom gaining 10 cents on its share price at 3.33%. If you were to do a stock pick as to which has been the stellar performer, which would it be?
Obviously, right now, it's a bit volatile and it's a bit zigzag, I would say that. You would still profit on the peaks, a bit of peaks, the peaks of the zigzag. And I think I would still pick Safaricom, one of the top performers. I think there's a bit of some sustained foreign investor activity with the stock. And I think if you want to anticipate the next foreign investor move, you would want to be in that stock. The second thing is I will still average out on banks. The market is anticipating a rate rise, although the extreme side of the market. But if you want the moderates in the market, obviously the bulls in the market, they will still anticipate. They'll tell you that they see the central bank, the Monetary Policy Committee holding the current rate. My take is that a rate cut down will be good for the market in the medium term. And I think in the region of 25 BPS, and I think other liquidity propping up measures should be brought in the market by the policy maker.
Right.
In terms of trying to, ease that liquidity position in the medium term. And I'm talking about a reverse repo, a short-term reverse repo, 3 to 5 to 6 months, will help the economy, especially the banking sector. And of course, that would come the market, and the translation of the market will see the banking stocks being re-rated on a medium-term basis.
All right, we do know obviously that the favored banks are the blue chips, the KCBs, the equities, even some of the foreign banks like Standard Chartered. But the bank that seems to be under the spotlight at the moment is Family Bank. There's been a management shake-up and a new strategy to move the bank from operating in the micro lending space to try to give it a bigger profile in the wholesale banking space, particular emphasis on retail and corporate banking. What do you make of what's going on there?
I think it's expected. When you want to become a public company, obviously you have to shake up your top management level and your senior management staff. And you want to give it a more corporate approach and give it a more corporate figure. And that's obviously what's going on with Family Bank. But when it comes to market, obviously there's a world of intrinsic value and the world of market prices. So all these will tally into the market. They want to build their profile as they come to the market. As you just said, they're trying to build themselves from that micro lender picture to a very big corporate lender.
All right, obviously we're waiting for this extraordinary meeting of the central bank, and we're likely to see some kind of movement on the monetary policy front. But what we do know, looking at the macro picture, is that the bank's been very active in the market, and that's really led to a depletion of foreign reserves. We've seen a drop by 7 billion Kenyan shillings due to central bank's activities in the markets. Yesterday, the shilling at its lowest level. What do you see going forward by way of an outlook for the currency as a result of monetary policy?
Well, it's very vital to take cognizance of the fact that it's a classical dichotomy for the central bank, and it's really a knife-edge scenario for them. They have to, inflation is still rearing its ugly head here, and potentially it could create a nasty economic environment of stagnation and high inflation. But then again, while they reprioritize inflation, they also have to prop up the economy at the same time. And I think I'm seeing a situation where they could strike. Obviously, my take is a rate cut down would be good for the economic side,
Right.
a medium-term growth prospect.